Okay, g'day, Rudy here, 17th of October. Welcome to the end of week review of the tank MVR. For those that are new, I'll get into why he's called the tank later on. So before we go into it, something a bit different, a bit of housework. We'll just go through the top 10 ETFs by market cap. And I'd bet $1 million that VAS VGS is what you guys are in. IVV, A200, IOZ, Qual, blah. No MVR. Oh, he must be talking shit, that guy. Then we go to the inflows, so international Australian equities. And we go through the top performing products for the month. So we got some ninjas. And again, if you're new, I'll explain what ninjas are. But these are basically the high risk part of the MVR edition. So we've got miners, GDX, and wire, all three ninjas. So we're doing all right. Just got to get you out of that VAS VGS combo. So hang in there if this is your first time. I've got this message I thought sort of sums up nicely what I'm trying to do, from Ostentatious here. He says, "Can't thank you enough, mate. Learnt so much from your vids in just 1 month or so, from not knowing what resistance or support meant to now having a rudimentary understanding of charts. Your simplistic style and presentation is just what I was after. A rare win for YouTube. No dumb mouth open post to gain clicks. I hate that too. They, look at me." I was originally going to invest in the VAS VGS compo, but felt boring, and I was always drawn to commodities. It's probably unwise to listen to some bloke you don't know from YouTube when it comes to your money, but your info, at the very least, encouraged me to do my own research. Some of your ninjas, aka miners, wire, are in my relatively small portfolio and are thus far easily my best performers. It's a shame you're retired. So I think that sort of sums up what I'm trying to do here. So enough of the festivities. Let's get into it, shall we? Okay, so for older members, always start with the eulogy. So what's my theme for the next 10-20 years is commodities. So this is the commodity cycle since the 1800s. And here we are now. This is a live version chart of that bottom there. It's got what we call a cup and a handle, and we're just breaking out of the handle now. So we're just starting. Okay, so who is MVR? All right, so MVR is basically 31 companies from the ASX, biggest weightings, so BHP, Woodside, Northern Star, so 6%. And we'll go through each of them to see how they're all tracking. So as the order we go in is the weighting they have. So this is the MVR price chart. So how do we go for the week? So we had a nice up week. The target, so for new people who haven't seen, the target, so the medium term target is up here, and I expect him to keep going over the next many years. So it's not too late. Okay, now a lot of you probably have got this guy here, VAS. It's a very popular ETF by most people. So we're having a bit of a indecision candle this week, top or bottom. So what I like to do is use ratios with charts. So if I take the chart of MVR and divide it by the chart of VAS, I get this picture. So this is so coming down means VAS has been outperforming. So you didn't want to be. MVR is a new thing, so you haven't done the wrong thing. It's just that now things move in cycles. So this is MVR over VAS. So in August, beginning of August, is when MVR, and I expect this outperformance to continue. Now another one you probably haven't heard, your VGS VAS people, is like, oh, what percent VGS, what percent VAS should I have? Well, this ratio here, VGS over VAS, shows you that you shouldn't have invested 0 in VAS. VGS has outperformed, if you take the ruler, so 90% VGS has outperformed VAS. So I bet you the guy with the smiley open face didn't tell you that, did he? It's not your fault. Everyone does it. You can see by the popularity. Okay, so some other little ratios we do. So MVR over the banks, QFN, so outperforming the banks. MVR over VGS, outperforming VGS. MVR over IVV, outperforming IVV. MVR over the Nasdaq, outperforming the Nasdaq. And this is MVR's the tank. He's not a ninja. Ninja are the more high growth one. So this guy just, I'll go through at the end the philosophy on how I create a portfolio of tanks and ninjas. So this isn't, he's not even the fast one. MVR over VDHG, so that's it's one of those diversified growth all-in-ones. Alright, so let's go through the people in MVR. So before we do that, so we look at the iron ore price. So iron ore price just tracking sideways, and we don't expect much from iron ore because we're in a metals bull market. The copper price, long-term uptrend, just hitting some resistance here. So the reason we look at that is because of this fella, BHP. This is what he mines. So BHP's broken out of its consolidation now. So he's saying, let me be free. So BHP, so that's the biggest holding in MVR. Then we come to a bit of a so oil's getting absolutely smacked at the moment. Just what Trump wants, a low oil price. Now the positive thing is it's great for miners because a lot of their input costs are fuel. So it's good for miners. It's not good for the guy we're about to look at though. So it'll be interesting to see what oil does, if it holds support here or it falls through. Natural gas, that's the other part of it. So natural gas hasn't tanked yet, so see what happens at support. So why do we look at that? Because of this guy here, the King Woodside. So his div's probably up to 7.5 now after today. So Woodside's, that's an ugly candle to finish the week on. It went up and then went down, finished right there. So if he finishes down, I shouldn't be laughing. I'm not laughing really. But at 20, this is the next level. But in the ETF, you need some of them that pay the bills. So Woodside pays the div 7.5%. So BHP can go off to work and do the hard stuff, and Woodside can sit back and pay the bills. Well, that's sort of the philosophy of the tank, this ETF anyway. Because we've got people like this in there. Gold, look at that. Hey, unbelievable. That's when I started this channel preaching about gold in February, March. Look at that. We'll get into. So why do we show that? Because this is the third largest holding. So Northern Star, it's the biggest gold miner on the ASX. So it's going to rip Fortescue. So they're not into gold, they're into iron ore. But they're looking good. They pay a nice div too. Rio. So Rio is a bit like BHP, copper, iron ore. Except BHP went into a lot more debt to buy copper assets. So Linus, so that's our rare earth miner. Okay, so for those technically inclined with the chart, it made its the flagpole from here to here, add it to there, so it made its measured target. It's pulled back to the 20. We're on a this is a daily chart now, a 20 day moving average. So I'd say if that opens up on Monday, then that's a buy again. In a resource market, you just got to buy the dips, even though that's when you want to sell a lot. Evolution, it's the next one. So they're a copper and gold miner, looking fine. Origin Energy, so they're in the fuel business, so they're just plodding along. Pay 4.9 div, so help pay the bills. Santos, so it's another. Well, the good news, pays a 5. Well, it's probably 6.5% now. Anyway, oil and gas, so they're getting hammered. So it'd probably be a nice buy at $6. Being an ETF, you don't have a choice, but put them all together and they have good days and bad days. So this is aluminium price. So that looks like it's about to break out. Zinc's already broken out. Lead. So lead looks like it's testing support again. So why do we look at them? Because South 32. So South 32 mines those ones. So they're really at the bottom of their cycle. So he'll do well for the MVR. Orica. So they're the company that blow stuff up. So they got the explosive chemicals blasting. So they're not at all-time highs. They're fine. Then we've got another gold stock. So Ramelius, doing fine. Then we look at lithium. So this is the lithium price. It's funny how the stocks, they go up and down, but the lithium price is flat. That's because of all this China battery concerns, supply chains, blah. So Pilbara Minerals, PLS, that's our lithium play. So we had him first as a buy down here. Probably have to give another one. Worley. So Worley Parsons, so they're global engineering, project management. So it looks, well, that's actually a bullish, big green candle, sideways consolidation. So maybe next move up. Ampol, so in the fuel business, so they're holding up nicely, going sideways. Perseus, gold stock, giddy up. Coal, so this is the coal price, thermal coal price. So it's done there's your break from the declining wedge, double bottom, potentially a bottom we're in now. So that flows through to this guy, Whitehaven Coal. So beautiful long-term flag, so no issues there. Mineral Resources, there's that declining wedge break. So they're sort of mining services and a bit of iron ore, so they're okay. So you can see it's only really Woodside and Santos getting smacked. Genesis, they're another gold producer. Capricorn, another gold producer. Sandfire, a copper miner. So they've all, yeah, they're going. Horizon, so they're in the sort of rail freight business. They got to truck all the commodities around. So just because some of these I do as individual stocks buys during the week, the daily ninja videos. So that looks good. Pays a nice 4.9 div too. So it's not just so this ETF just isn't growth. It pays you a nice div, probably as much as the banks do. So this is Dino Nobel. So they're in the blowing up business as well. Commercial explosives, looks fine. Regis, another gold producer. So just taking out all-time highs here. Remember, gold was about half the price back here. So this just shows how undervalued gold stocks were. And that was the first buy. Just get anyway. Stay on track. Ready? Okay, so Luca made the measured move. There's your flagpole. Add it to the breakout. So that's a real look at that candle for a week. Ooh. Do you get nervous? No. It's down to the 20-day moving average, and look at that, came down and then popped right up. So if you're an astute trader, you would have bought that today. Anyway, that looks fine. Scary, but fine. Uranium. This is the actual spot uranium price. So it's got that lovely sort of cup and a high handle here. So it's broken the wedge up, down. So long term, as long as it's holding above the 20-week moving average, it's fine. So Paladin, that's our uranium miner. So that's looking fine, nothing problems. Monadelphous, so they're mining services. They help miners with their getting the job done. So there's going to be no lack of pipeline work for them. Beach, so they're in the oil and gas business, holding up quite well, really, when you think of it. And they're 8% div, so they're another one that pays the bills. So they're interesting there. Anyway, Liontown, so they're another lithium play, so they're looking fine. Now obviously, as we're coming down to low weightings of MVR now, so they don't really make a big difference, but it's good to have everyone chip in. IGO, so they're another lithium play. And then last but not least, we've got Terra Royalty. They don't do much but just collect revenue from a royalty stream from one of BHP's iron ore operations. Pays a div of 5.5. So when you consider all the banks paying, I think ANZ pays 5, but Commonwealth Bank high 2s, the rest are in the 4s. So you're getting bank-like dividends with, where's that ratio? IFN, QFN. So bank-like dividends, and so this is MVR over all the banks put together, plus Macquarie, because it's QFN. So more equal or more dividends and better growth. Alright, so now into the section where I go through how to construct a portfolio. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do. That basically depends on, do I want the riches in the castle? So basically, if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. All right. So you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF, like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are which you can't get on the ASX. So these guys do a bit more of a powerful job than the ASX ones. So we've got a rare earth ETF, a uranium ETF, but these are the large caps. These are the medium cap uranium miners. SilJ, which is your silver miners. You get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF. You get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get 1 or 2 companies in lithium, whereas in here you get about 30. Okay, all right. So what percent of tank and ninjas should I use? All right. Well, so ultimate risk, like game on. I'll take anything. All right, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk, okay? So that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash. But that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, that's the So you've got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make at least 10-20% per annum. I mean, a lot of them are up all that in 6 months. But it's, nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.